All right. If you are here from StockTwits, you have seen ZIM shipping trending a lot over the past couple months, over a year. They're always trending pretty frequently. Don't mind the hair, just woke up, but I wanted to get this video out because I have seen this company a lot. They are volatile. They've been growing a ton recently, though. They have a pretty huge dividend. It's like 30% of their income, which is crazy. So we are just going to dive into it. Their recent earnings report was fantastic. They're up, I think, 8% right now. And yeah, let's just do it. Let's get into it. All right, so similar to Target, which I did earlier today, we are going to go through these financials fairly quickly so then we can get into their earnings report, their stock chart, and go through, see what they're doing right, because they have been, you can see the smaller chart right here, over the past 2-ish years, they have really been doing it right. I am actually a former ZIM investor. I did sell the company for a profit, to be fair, but I was in the company at like $10 to $14, somewhere around there, and rode it all the way down and then rode it back up. I believe I sold, or actually that's 2024. I believe I was in the company somewhere around here and sold it a few months later for a little bit of a profit. One thing with them is they have a massive dividend. I know it says 4.3% here, but I'm almost 100% sure it is significantly more than that because they pay out like 30% of their income or something. I think they're required to, just because of whatever laws are involved with their company in the country they're in. So I think they're required to pay out 30% of their income or their profit in dividends. So anyway, let's get through it fairly quickly. Hopefully, cost of capital isn't stated, but it's honestly probably high because this is a shipping company and they operate massive multi-billion-dollar cargo ships, but don't really care. Target price is below. Long-term growth rate looks really good. Let's go to the income statement. I am hoping that everything looks really solid for them, which it honestly does. This is quarters. Let's go. Oh, sorry. Let's go into the years and just kind of blast through this. So overall, wow, they actually took a enormous hit in 2023, it looks like, after exploding during COVID. So, okay, this is something that I actually just learned about the other day. I forget what the term is, but essentially they saw an explosion of activity during the pandemic, and they have now since returned to normal levels. So, what I'm going to consider here is from 2020 to 2023, where we're now back at the normal shipping levels. And you could see they have had significant growth since then, going from just under 4 to almost 6 billion in revenue. So I'm going to assume that this is some inflated numbers from COVID and give them the half credit here because that's just what I'm imagining is happening. For operating income, again, it's going to be fairly similar for all of these, but also for operating income, it looks like it's fairly low. In 23, it was actually negative, which is not fantastic. So I'm going to do another 0.5 there because it does look like they are kind of recovering it, but we'll have to see where it goes from here. And then net income is actually very negative. They've had a fairly significant loss. So don't think I'm just being lazy by putting 0.5s across the board. I do believe they deserve that just with the way the company has been heading. But again, the reason I'm doing the 0.5s is because while it does look like everything declined, I do believe this is because of massive demand during COVID, just massively increasing shipping prices. In reality, most of their costs probably didn't increase while the cost of shipping enormously did. So they just made an insane amount of profit. And now they're most likely trying to accelerate back to that growth, and they probably projected, I'd imagine, to continue the same numbers maybe, and that's why they're negative now. But we'll have to see. In terms of total shares, looks like it's been roughly the same for a while now, right? Oops, sorry. Right around 120, 117. Yeah. So nothing too crazy there. I'm going to give them the credit. Balance sheet should probably be decent, I'd imagine, just based on where they're at. And I mean, okay, so two things I'm going to say. Their cash is enough to cover their short term, which is good. Their assets have actually decreased even from 2021, which is not fantastic. Although, again, compared to where the 2020 mark is at, which was their previous high, I'm going to say that they're probably just selling off all of the extra stuff that they had from the COVID boom, and now this is what they have left. I'm going to assume that's what happened. Their short term is coverable by their cash, although one thing to note is that this year it is pretty close. They only have about 100 million extra. And then retained earnings is actually positive, and although it has gone down in the past year, it is positive, which is mostly what I'm looking for. So that's not too bad. Cash flows, hoping they are good. Operating is positive positive every single year, including 23, where we saw a dip in their net income. So that is pretty solid. Obviously, we're seeing the recovery and growth this year too, which I like. Investing, it looks like, again, they have been selling off their investments. But you also have to remember and see here, they bought 1.3 billion of investments in 2022. Now, they are continuing to sell into this year, but I'm assuming it's just possibly fairly low asset turnover, maybe, where they're it just takes a while to get rid of everything they brought on. But also they brought on 1.3, sold 1.8, and an extra 700 million. So that is another thing. They could just be selling extra stuff as well. But either way, I think they're most likely doing a fairly good job of cutting costs in the company, which we will see in the SG&A to sales and margins and things like that soon. For financing, looks pretty solid. Looks like most of it is actually from, so we don't have a definite number yet for 2024, but we can see it is still negative. Repayments of leases is the biggest thing. So it's actually not reduction of debt or changing capital stock. So what I'm going to do here is give that the 0.5, because the two I'm looking for are reduction of debt and changing capital stock. While paying off leases is good, they do still have a decent amount of long-term debt, and their capital stock has not really changed in 4 years, basically. And then for free cash flow, always positive. That is good enough for me, honestly. It looks pretty solid, especially with the further growth this year. Let's check out their use of cash. We shouldn't see any repayment of debt or repurchasing of stock. Yeah, kind of doubt it. If I can bring that over a little bit, let's see. I'm not sure why. Oh, sorry. I have it set to 25 years. So again, not a lot of issuance and a little bit of repayment actually over the past few years, which is actually pretty solid. At least for the past 2 years, they've been outpacing issuance, which I like. Other than that, a little bit in 2021, but I think that does deserve the 0.5, although it is fairly slight repayment, and they did kind of cancel out some of it with more issuance. They also have a very large amount of interest expense, which is another thing to think of. Their interest expense is comparable to their free cash flow, which is crazy. I mean, it is lower, but only 140 million lower. That's not great. That's actually fairly bad. And then for stock repurchases, they have none. So not even going into it. Let's get to the ratios. I'm hoping to see some pretty solid ones here. Overall, the score is not that bad, at least in my opinion. So SG&A to sales looks fairly decent. To be fair, the 5-year average is 3.5 and they are above it. So I think that's going to be an automatic 0.5 because it is still 5% is very low compared to some of the other companies we've reviewed. If you happen to remember, I mean, it is the highest they've seen since 2016 at the earliest. So that is definitely something to also consider. Their SG&A being this high isn't exactly the best thing, but I think I will actually. You also have to consider the increased sales growth compared to 2020, where it was at 3.6 SG&A to 5.11, but also the sales growth since then has been like 20 or 30%. So that is another thing that that's why the 0.5 is there. Net margin is terrible in 2023. Let's see if the quarters make it look any better. And honestly, they do not. The quarters make it look worse. They've been consistently negative in the net margin area for 5 quarters now, 4 quarters, which is not great. For ROA and ROE, again, big negatives, not liking it. And then long-term debt to total equity, actually kind of surprising. I really didn't think they had too much long-term debt, but also I guess they didn't have the greatest amount of equity either. And you could see in the past year, it has really ramped up. So considering it is above 100 now and increasing, I'm going to give them the 0 there. So overall for ZIM, 13 out of 23, 53%. Not terrible, not the worst score we've seen. I already forgot what I said there, 53%. Not too bad, considering it's a fairly volatile company, as I'll show in the chart here in a moment. So let's look at their earnings report here. We can see reported revenues. This is just came out today at 7 a.m. Reported revenues of 277, adjusted EBIT 1.24, pretty solid. EBIT and EBIT margins of 55 and 45%. So 12% volume growth year over year with record carried volume, which is honestly very good. So you could see this is the growth that I'm talking about earlier, where from 2020, although you saw massive sales increases, that was artificially inflated from COVID, where shipping was just extremely expensive. So they made record profits, but they are still growing. So their entire bottom line is essentially affected by what the cost of shipping is total. So that is something to consider. So something like this is why they're up 8% today. Actually, now over 11%. You can see here they're at 29 now, but we will get into that in a moment. So again, an earnings report like this is going to do that. Completely unlike Target, which fell short in many things. Let's just keep going through this though. Increased dividend, 440 million. Again, they have a massive dividend. Regular dividend of 340 plus a special dividend, which investors love special dividends. Again, almost above 12% now. We'll most likely see them hit 12 or 15% positive today. Regular 281.84, pretty solid. And then some third quarter highlights. I'll zoom in for you here. So net income was 1.13 billion compared to the 2.27 of 2023 loss. EBIT, a year-over-year increase of 600%, which is pretty good. Increase in operating income compared to the loss last year. Again, increases. Just seeing the total carried volume again. Average freight rate had an increase of 118%. So you can see 2023, I guess the shipping costs were just very, very low, at least compared to COVID and where it is now. So now that shipping costs are recovering, they are recovering as well. So that is honestly fantastic for the company. We're seeing a little bit of an increase in debt. However, their ratio improved 0.9 compared to 2.2. So that is also pretty solid. And then there are some other metrics here. I believe this is just the same things again that you can read through. And then if you want to read through this, you can pause if you want to. There's probably just a lot of restated stuff, but a little bit more information. More information here. If you do want to read that, you can. But anyway, that is it for ZIM. We can see their chart here. So they were massively inflated. I believe they went public right here in 21 and massively inflated because of COVID. Once the COVID demand died down, they died down with it. And now that they are stable again and it's back to generally business as usual, shipping costs are kind of stabilizing, they are taking off once again. I would not be surprised to see them back at the same price levels in a few years, honestly. Just because of where their like trajectory is headed, it really wouldn't surprise me. But again, they also have a massive dividend that is going to hurt their growth. But the fact that over the past 1 year, as you can see right in here, they have grown by roughly 300% over the past year. I really don't think there's anything too crazy to worry about. So again, I'm predicting the company will continue to do very well. I have invested in this company before, and unfortunately I got out of it. I would have liked to be where it's at now, but hindsight's 2020. So anyway, that is it for today. Hope you enjoyed. Hope you learned something. This is ZIM Integrated Shipping Services Ltd. Make sure to subscribe, and I will see you next time.